Jeff Bezos lessons.
AI boom versus internet bubble.
Welcome back to the channel. Today, we're tackling a hot topic, market bubbles. Are all bubbles bad? And what does the past tell us about that? Let's dive into this lesson from Jeff Bezos.
If you go back, like the 90s had a biotech bubble. And there were a bunch of pharma startup companies that were designing drugs and using new techniques, and the world got very excited. The investment world got very excited. As a group, they all lost money. But we did get a couple of life-saving drugs. A bubble like a banking bubble, the crisis in the banking system, that's just bad. That's like 2008. And so those bubbles society wants to avoid. The ones that are industrial are not nearly as bad. They could even be good, because when the dust settles and you see who are the winners, society benefits from those inventions. They still get those life-saving drugs. And that's what's going to happen here too. This is real. The benefits to society from AI are going to be gigantic. In the year 2000, when the internet bubble burst, Amazon's stock, in a very short period of time, went from $113 a share to $6 a share. And by the way, it's split many times since then. I don't know, 20 for 1 or maybe even more. I don't have the number. But so these prices have nothing to do with today's stock prices. But to go from 113 to 6 in a short period of time was very concerning, and shareholders were upset, employees were nervous. We had all of our employee base, their parents were all calling our employees and saying, "Are you okay?" You know, this was the environment of great nervousness. But I looked at the numbers in the business, and every month, as the stock price went from 113 to 6, a number of customers went up every month. Our gross profits went up every month. Our operating expense, we were still in a loss position, but our losses as a percentage of sales went down every month. Every single business metric, new customers, customer repeat purchases, everything that we were monitoring through that entire period kept getting better. And so that's one observation about bubbles in general. The fundamentals can be disconnected, the fundamentals of the business. And of course, as entrepreneurs, you're focused on the fundamentals of the business. The stock price is an output, an ultimate output that you actually have very little control over. Benjamin Graham, the great investor, is famous for saying, in the short term, the stock market is a voting machine. In the long term, it's a weighing machine. And so as founders and entrepreneurs and business people, our job is to build a heavy company. We want to build a company that when it is weighed, it is a very heavy company. We do not want to focus on the stock price. And so that will be misleading because it can be disconnected from the fundamentals. And when bubbles happen, so that's one thing that happens.
The single most important lesson is to focus relentlessly on your business's core fundamentals and not in the immediacy of the market. The key for entrepreneurs is understanding the underlying fundamentals.
Practical advice for entrepreneurs. Don't chase hype blindly. Focus on sustainable applications that truly matter. Prepare for volatility, but stay committed.
So hype comes and goes, but true innovation lasts. Build a fundamentally strong, heavy company, and you'll be positioned for long-term success, regardless of short-term market noise. Stay focused on what truly matters, your customers and your core metrics. Don't forget to like, subscribe, and tell us in the comments, are you building for the long run